Context is really key here. We actually were positive on Facebook for 4 years. More than that, actually. We went to neutral in June 27th. We actually downgraded the stock to hold. The stock since then, as everyone knows, has gone from over $200 to about $150 when we upgraded yesterday. We really think a lot of the bad news is in the stock. It trades at an out-year multiple of around 19 times earnings. That's on par with the S&P 500, but we have a lot more growth. There's a big balance sheet. Look, I know about the risks, but the stock already has priced those in.
Yeah, but I mean, what about the fact that Facebook may have growth, but growth stocks are under assault? Why would now be the time to buy one of them, which seemingly you've got this big rotation going on into value from these high-flying marquee names?
Yeah, you know what's interesting, Scott, is that I could whisper to you that Facebook is a value name right now, and that's kind of key to our thesis to some extent. You know, the conversation earlier was about names like Amazon and Netflix, and there have been a lot of questions related to their valuations. But when you look at Facebook, the questions really aren't around valuation at this point. It's really more around the fundamental story, how bad is revenue deceleration and margin compression going to be. And we think the company could actually surprise on the upside. You have a lot of people leaning, we think, in the wrong direction ahead of earnings, and that's why we went positive.
Are you confident that you have a handle, Scott, on what the company will have to spend in order to deal with security and fake news, et cetera? Do you have a good handle on what the future U.S. regulation could be on Facebook and its peers and what that might cost? Because that seems like that's the unknown. I mean, if I feel like we're going to go into the conference call and they're going to drop a bomb again about expenses, which seems like it happens not infrequently.
Yeah, no, you're right. In short, to answer your question, no. I really don't know exactly how much they plan on spending or how much they plan on telling us they're going to be spending. It's going to be a lot. But you know what? There are a few companies in the position that they are to spend considerably. I'm talking about billions of dollars on this type of initiative. And you know what? They have already level set in terms of, you know, what they're expecting and what they think the street should be expecting. And it's our belief that they've set the bar extremely low. I doubt very highly that they're going to take another cut at kind of reducing the, let's call it, intermediate term outlook for their fundamentals at this point. I'm not saying they're going to be great, but I don't see a lot of, let's say, go forward disappointment. I agree with you that there could be third-party kind of legal and regulatory issues coming into the story even at this point, but we think that's largely priced into the stock. I mean, this is trading at a market multiple with far more growth and a lot more levers to pull for growth, and even, dare I say, using that balance sheet to create value, maybe with a buyback or something else.
You are, though, more realistic before we go on you know, how much the stock can appreciate, even though you upgraded to buy. You do, and I want to let our viewers know, cut the price target to 181 from 199.
Scott. Yep, exactly. So our 12-month target price is $181, which in this market offers, we think, some nice risk-adjusted potential upside. And I think in this environment, Scott, as you pointed out, people looking at pure growth with revenue gains only are going to probably be underperforming. That's one of the reasons why, surprisingly, we think it makes sense to look at Facebook right now.
I got you.